Is the price of gold about to move out to fresh all-time highs, or actually is the move we've seen over the last couple of weeks something of an outlier, and now is the time to sell gold? I'm David Jones. I thought it'd be really interesting to take a look at gold, given the moves that we've seen. Because if we go back, if we catch up, have a quick look at the charts, in September and November last year, it traded to its worst levels in more than 2 years, and it was bumping around the $1,620 an ounce mark. But since then, since those November lows, we've seen this great rally, which yesterday briefly pushed through $2,000 an ounce, which is a 20% gain in less than 5 months. That is a big move. But this has also put it close to where it surged to on the Ukraine crisis, and that proved to be an important top, around $2,070 an ounce. So given that high was left last year, are we really going to see gold break it this time round? So as usual in this video, I'll go through some of the recent news and the factors driving gold higher. We'll talk about that. Then we'll jump on to the charts, take a look at things in a bit more detail. I think there are arguments for both trades here, either going short or going long. I think it depends on your time frame. I've definitely got my preferred direction when it comes to gold, but we'll have a look at that when we've been through the news. Before we do that, a quick mention for the newsletter that I launched about a month ago, I think now. If you, it comes out on a Saturday, and it looks at what's going on in markets, what's the hot market to watch next week, what am I trading at the moment, and a trading tip in there as well. It's all free of charge, only once a week, as I say. If you go to my website, jonesthemarkets.com, and scroll to the bottom of the page, you can put your name in, your email address in the box there, and you'll be on the list for the next newsletter that goes out on Saturday. There's also details on there about the trading course I've run, some details of the 5-star Trustpilot reviews, all of that. But for the newsletter, scroll to the bottom and sign up. Right, let's get into it and take a look at gold in a bit more detail. So like I said, when we're looking at the charts at the beginning there, we saw gold hit this high in February, March last year, but in September, November, traded down to a 2.5-year low, down ahead of $1,600 an ounce. Since then, we've seen the market bounce back. Just this week, we've seen it trade briefly as high as $2,010 an ounce. This is the best levels since March 2022. And of course, the peak back then was off the back of the Russian invasion of Ukraine, when we saw gold hit $2,070 an ounce. Not surprising. When we saw that event happen, we saw volatility across all sorts of markets. And I'm wondering, what we've got now, or what we've had in perhaps the last couple of weeks, has it been something of a perfect storm in the short term for the gold price? We know that over the last week and a half, markets have been very concerned about what's going on with banks. We've seen the failure of Silicon Valley Bank. We saw Credit Suisse needing support last week, a loan from the central bank in Switzerland, and ultimately being taken over by UBS, another Swiss bank, over the weekend. So we have a bit of a crisis in financial markets. And all of this has led to some speculation. We've got that interest rate decision on Wednesday of this week in the US from the Federal Reserve. All of this has led some to speculate that perhaps the Fed will be less aggressive with its interest rate rises because of concern about what's going on in the banking sector. And if it's less aggressive with its interest rate rises, that could mean that higher inflation will be here for longer. So all of this, uncertainty in financial markets, calmer approach to interest rates, potentially higher inflation, that would all be seen traditionally as good for gold. But I think the question we have to ask ourselves as traders is, well, is that already factored into the price? If we're jumping in now, thinking gold's going to go higher, are we too late to the party? So that's the question. Have we already seen the high? Over the past week or so, we have seen stock markets more stable after the initial volatility and nerves. So is what's going on in the banking sector really going to turn into financial crisis part 2? Or actually, was it just a short-term storm that has passed and we've seen markets get back to normal and that will put pressure on the price of gold. Let's take a look. Like I say, I know what I think with gold up at these levels, but let's have a look on the charts. We'll have a look at a medium-term trading idea and a short-term trading idea. Let's jump on there. So here we have the big picture in gold. We had the all-time highs from August 2020. They're up around $2,075 an ounce, that sort of area, after gold had in March of 2020, when of course we know the coronavirus started spooking investors around the world, had traded to 1450. Then we had fairly sideways markets. We had the Russian invasion of Ukraine. Let's zoom things in a little. And that took the market up, not quite through that all-time high. Came within a few dollars of the all-time high, but couldn't take it out. And that ended up being a really important high for gold in 2022. We saw the market sell off down to these lows. And it was interesting, down at these lows, we saw quite a few tests of those lows around 1620 an ounce. And here we are now. We've seen the price of gold trade up just at the beginning of this week, trade as high as just shy of $2,010, fairly briefly up there, and has backed off over the last couple of days. So what can we take from this? I think there's a couple of ways of looking at this. I know which way I'm leading on gold, but if we take things step out, there we go. If we go to the last 12 months, all we've seen for gold is move to near the top of the range. Okay, so we've seen it poke above $2,000. It hasn't really held there. If we take a look at the RSI down here, the RSI has gone overbought, as you would expect, suggesting that perhaps the market has gone too far. It had been oversold down here ahead of $1,800, which worked well. The last time it was overbought was back up here, beginning of the year in January. The market did eventually roll over. So we are at an extreme from an RSI reading. And if you thought, well, actually, gold is stuck in what is essentially a massive sideways range over the last 12 months, there's the argument for selling short up here. An aggressive trade, which would be to go short, where we're trading now, $1,968 an ounce, with a stop above the high from the beginning of the week, stop above 2010 somewhere. If you thought that gold had overreacted to everything that's been going on in markets over the last week and a half, then I think that's definitely an interesting trade. The other way of looking at it, or actually still sticking with the short argument, well, if back in March of 2022, when concerns about inflation were really jumping higher, when we had the Russian invasion of Ukraine, if gold could only get as high as $2,070 an ounce back then, is there really a catalyst that's going to drive gold out to all-time highs from where we are now? So again, that does feed into the argument that we've seen an important short-term extreme, at the very least, up here for gold. So it does, if that was your view, well, if it couldn't get past the previous all-time highs when we have an invasion by Russia of Ukraine, what's really going to propel this market $100+ higher from here to take out those highs? So that's another argument leaning to the short side. And that's sort of where I sit on gold. It's had a great run. We've seen it, 10% higher just this month, just in March, 10% move off the lows for the price of gold. And I do think up here, okay, perhaps it's a little bit overcooked. So it wouldn't surprise me at all in the short to medium term if we saw the price of gold start to drift lower. And my target would be ultimately, I suppose, for a run back to those lows from earlier in March, down around 1800, which, let's not forget, was only a couple of weeks ago. It's not as if it's taken 6 months to get to where it did yesterday. So that for me, I think, is the more medium-term outlook. We've got big resistance up here. We've got the rally on the way back as it was coming down. The rally in April stopped short of 2000. We've got the big level at 2070 from the Russian invasion. So medium term, I'm expecting this market to be under some pressure. So it's interesting to watch it. But from a shorter term point of view, there could always be some juice left in the tank. Let's take a look. We do have an interest rate decision this week on Wednesday from the US Central Bank, the Fed. Some speculation. Perhaps they'll be a bit less aggressive with the interest rate decision. because of what's going on with the banking sector, or perhaps they'll stick to their guns. Anyway, and expect volatility over that decision. It'll be interesting to see how the market reacts, but we do still have, if we look on the hourlies, here's the trend off the March low. So what could be the trade here? This is the shorter term trend. We're looking at the hourly chart. Before we do that, a quick word about my own trading performance. I've been running a trading course for a couple of years now, and last year I launched a shorter term trading course. Because I think there's so much smoke and mirrors with trading courses, I decided to publicly trade an account from November last year to the end of January. It was a £4,000 account. I chose £4,000 because I thought where some may have less money, some may have more money, £4,000 seemed like a sensible, arbitrary number to use. The risk per trade was £100 risk per trade. I traded a whole range of markets, and this is the report from my broker at the end of January 2023. It made money. I'm just surprised how well it did. And of course, I should say that past performance is no guarantee of the future. But you can see it booked profits, had realised profits just under £2,200. That was from a £4,000 account. It did 54 trades. You can see it in here, the win rate, the percentage of trades that were profitable, about 2/3 of trades made money. And there you can see the overall P&L. It was a very sensible approach to trading, following trends, also looking for trend reversals, managing risks. Not all trades were winners, of course, because that's not how trading works. You can see the P&L breakdown in a bit more detail down here. Again, as usual, it's the big winning trades that make the difference to any trading performance. But I did this to show that the approaches I talk about in my trading course, do work in the real world, to show how they worked out in the real world. If you were watching my YouTube channel back at the end of last year, I did regular updates as to how things were progressing, but this was the situation at the end of January once I'd done the 3 months of sort of being open about the trades I was taking. To find out more, go to the website jonesthemarkets.com/performance. I'll put a link in at the bottom of this video, and you can read a bit more and see all the details of all the trades I did as part of this trading course, and sign up for the trading course if you'd like to. So back to this hourly chart for gold. I think it's interesting here. There's the move yesterday through $2,000 early in the morning, between 7 and 8 in the morning UK time. The market has backed off a bit today, but that trend is still up. So even though I think surely we've seen an extreme, or we are near an extreme for gold based on the daily chart, on the hourly chart there could still be opportunities. Markets seldom turn around immediately in one day. They can take a bit of time, bit of back and forth, until they decide that actually the trend's going to reverse. So I think it could be an interesting trade down here if we thought that the market was going to move higher. So with the market trading at 1968, where would your stop go? If you were going to be a buyer looking for a short-term squeeze up from here, perhaps a bit of volatility over the interest rate decisions. If I was thinking about stop losses, probably I'd want to give the stop loss a bit of room, given how volatile gold can be. I think for me, the most aggressive place I'd have a stop, and I wouldn't do it in my trade personally, but around $1,950 an ounce, perhaps the other side of there, perhaps as a psychological level. In reality, I'd want to give it a lot more room. Even if we only went below last Friday's low, the stop needs to be the other side of 1915, something like that, the other side of 1918, which is a $50 stop. If we only think the market's going back up to test the high from earlier in the week, the risk reward in that is not particularly good. So perhaps the trade here, rather than being a buyer at 1968, be a bit more patient and see if we get a bit more weakness. If the market does sell off from here, I would be watching these lows from Thursday around 1912 and from Friday around 1918. So I think we have, or are near to, an extreme in gold from a more medium-term point of view. But from a short-term point of view, there's absolutely still an argument to be a buyer of the dip and get another push back up. If we take a look at the RSI on the hourly charts, not quite oversold yet. The last time we went oversold was just under a week ago, last Wednesday. On the hourlies, you can see it there on that dip below 1900. So a really interesting market to watch. Short term, I absolutely do not rule out another push to an extreme from here, but more medium term, I do think that these highs, the high we've seen so far this week, around 2010, and ultimately the high from March of 2022, around 2070, is going to be a barrier for gold. I'm surprised how well it's done. It's been great if you've been in the trade, but I do wonder if it starts to roll over from here. Let's take a look. We'll see on Friday. We'll have a look in the live stream on Friday, see how it's done, do an update. And then, of course, some of the dust will have settled after the interest rate decision. But a really interesting market to watch, considering how far it's come just in the last couple of weeks or so. That's it for this update in gold. Really interesting market to watch. Like I say, I think these old highs are going to be too big a barrier, but let's see how it turns out. Don't forget to sign up for the newsletter. Go to the website, put the link in the description down below. The newsletter goes out every Saturday, free of charge. As long as you're on the list, you'll get it every week from then. But for now, I think we're done with gold. We'll come back to it. We'll take a look at it in this Friday's live stream. But until we're back then, good luck with your trading.